Hello, everybody, and welcome to the Plus3 Forecasting Futures and Commodities Show. My name is Ben Maldonado. As always, I'm here with my partner, Barrie Hederachi. How you doing, Barrie?
Hey, Ben, I'm doing pretty well.
Good. We're here recording on 4th of July weekend. It's Saturday the 2nd, so we'll call this the Firecracker Show. Hopefully we have some firecrackers here, fireworks. Bitcoin certainly hasn't been disappointing. And on today's show, we're going to cover Bitcoin, the NQs. Barry's going to do the big five, which is the ES, 30-year Treasury bond, gold, crude oil, and the dollar/euro. And then I'm going to jump in and do a couple more commodities that are looking interesting, and that's wheat and coffee. So without any further ado, let's go to Bitcoin. The picture's not great if you're a bull. We're seeing no real signs of accumulation. All we keep seeing is these sort of plunges and then sideways moves, then another plunge, and now we're getting another sideways move. You know how we do it. We go level to level on the upside until we get above this 24,600 level. The price is vulnerable, right? Vulnerable to getting down to this half square, which is around 15,750, call it. And if we hit that and can't hold that, I've put in this target box where we have a couple different ABCs ending, which is in this 9,500 to 12,000 range. So, until we get above this full square, I think it's full steam ahead for these lower targets. Where are you on Bitcoin these days, Barry?
I'm pretty much on the same boat.
Yeah.
Yeah.
I mean, it's hard to build a bullish case until we start seeing, some upward movement and then pullbacks that hold significant levels or, give us higher lows. And we just haven't seen it.
Or at least some good squares, right?
Yeah.
Squaring out at some point. We don't even have that. So
no. So it's wait and see and hold your powder if you're interested in getting long, because it does look like right now probabilities favor lower prices.
And it tells you a good story about risk and where we are, in the cycle.
Absolutely. 100%. So let me flip it over to you and let's do the big five, and then you can toss it back and we'll hit some of the commodities. There's the ES.
Lots of lines. Are there too many lines on here?
Nah. No, I can follow it.
Yeah. I see some memes with, with Gantt charts with like 10,000 lines on it. So maybe I should tone it down a little bit.
Yeah, you can cut a few out.
There you go. Get it back.
Looks like you got a retrace on there.
Where is that?
I see 12 and a half, 15, 25, 37 and a half.
You mentioned percentages last time. So I put the percents coming off the low.
Oh, nice. That's good.
So this is 12 and a half will be right in there.
Talking about rallies?
Yeah. Mm-hmm. Yeah. Coming off this low. So 12 and a half,
that's
15.
Cool. Yeah, that's cool.
It's
a cool thing to point out.
Mm-hmm. All right. So we left it off last week. We talked about 38.50 to be the key level to watch, because if a pullback really can't hold above 38.75 at the best or 38.50 at the worst, that we're probably going to go down and, check the lows, retest the lows. And we came down and, we tested around pretty well. And I'll get into that a little bit more as I finish the E-mini segment. But for next week, I would say 38.50 again is the key level to watch, since we, slipped through it. And now it's resistance. And just like I mentioned last week, 38.75 was really the number to sort of hold. That would have been great. That would have been very bullish if we could have held that and just moved on. And so, for next week, really it's 38.75 is really where the major resistance is. But let's see if we can, grind through 38.50 if we can. The low looks okay. Remember last week, our whole point was it's not the upward. Let's see where the retest, where the pullback counter trend goes. And the counter trend really, was weak. It was a very deep counter trend, telling us that the market is, isn't as peppy as it used to be. But it held, pretty well above the lows. Not exactly hugely bullish, but it's okay. It's sloppy, but it's all right. It held in here. And we'll get into some of the levels and some of the angles you guys might be able to duplicate on your charts later. So for next week, one of the first point here is, 3850 to 3875 is resistance. And somehow we can get this thing to hold above 3850, 3875 would be even better. Then again, we have a shot at checking out 4,000. 3950 we talked about last week being resistance, and 4,000 being major resistance. So last week the high was right around 3950, so that worked out, which is wrapping right around the 50% of the square. And if we were able to hold that somehow, then 4,000 would have been the next. So for next week, if we can manage above 3850 to 75, then 3960 would be the key level to watch. Would be a little bit above, last week's high. So resistance actually moved down from 4,000, right? So for next week, it's actually, let me redo this. It'll be 39, let's say 60 would be the level to watch. Mm-hmm. So now we're kind of packing it up there. So we have a lot there to break through if we're going to go. Now, that said, let's go back and look at the low here. This low had a lot of timing in place. We had these 90s, 144s, and all kinds of fractals of timing cycles. Mm-hmm. I mean, low, not to mention we had a good solid 144 degree move down. And because of that, we should get some little bit of a relief from all that downward pressure. At least an ABCD up will be nice. Actually, I should put that in there.
Takes you right into your 4,000 area.
Yeah, see where that takes us. Wow, and even a little above, right? Right into the bottom of that zone up here. Mm-hmm. Isn't that funny how all these work? Mm-hmm. Fit together. So anyway, I'll leave it, let that be. And our sign would be 3850, would be the first sort of the sign of it moving higher than 3875. And if we can manage that, we've got about 100 points to the upside. I'm going to go into a little bit more of the S&P. Okay, mm-hmm. So here we're looking at a weekly chart that it's a different weekly chart than the normal, and I'll cover that in a second. And the point here is we were 144 down on that daily chart we just looked at from the high, but we're also 90 degrees up on this weekly chart. And that mm-hmm. support was pretty much at the same spot. Mm-hmm. And that's a big deal. So this low is a big deal. 144 down, we're 90 up on a weekly chart.
Yeah, that's a big spot. And that's from your COVID low, right?
That's from this huge low. Mm-hmm. And the significance of this low is, if this low goes at this point, I think we're probably going to go ahead and make new lows.
Yep. The whole square is going to be retraced.
The whole square could get filled up. There's no halfway messing around if that goes. Mm-hmm. That's my call. We'll see, right? Mm-hmm. We're going to probably go and test these. So it's not up here, not in here. It's probably going to be down here. Mm-hmm. And it's hard to imagine from this point, but, this was hard to imagine a while back. So
that's right.
That's just how that goes.
When NFTs and Bored Apes and everything, can you imagine getting to here when all that was happening?
Yeah.
Nobody believed it.
Exactly. Now, this chart we looked at earlier, and the help from this chart was really to watch this. We looked at it, and also you guys can go back and check the episodes from the past weeks to see where we were and how we got here and the things that we covered. So, a few weeks back, we looked at this chart specifically for this because of the resistance here, and all the comments are there in the older episodes. So anyway, this is, we basically broke out of the lower boundary, and now we're stuck here, which essentially is sort of a, it's a weak position, no question. Mm-hmm. But then again, in big moves, S&P always pushes a little bit lower than you would expect. And I would call that a little bit lower than expected. Mm-hmm. It's in the big picture, it's okay. But for next week, we need to really figure out, hey, is this the pullback lower before a move up to go up and test the 4,000 or at least 39, the 60, 70 area? Or is it just a one day option expiration kind of a hurrah, and we're going to sink back down. So I would say connect these lows. This trend line is really important now. This is, June 22nd low to last Thursday's low. If you do that, then we have if we take that out, then I would say we're in trouble. We're probably going to make new lows. There's no question, at least for this round. And the other thing you guys can do to watch is if you connect, these two highs, and that would be the high of June 10th to the high of June 28th. And that would give us a little triangle to watch. And we might bang around in there for a little bit, or we're going to go up and test this and break out, or
fail,
or not. Right? And looking at the low, we looked at that, where we rested on the 90 from the COVID lows here. And the 144 from here tells us that low is pretty good, meaning I would expect this trend line to hold if all is well, and we're kind of marching correctly then, and this level should hold, and we should kind of grind up one way or the other. All right, let's go into our regular E-mini chart here and see what happened. So about 3 weeks ago, we talked about, the market rallying up and kissing this line from below. And we even joked about it a little bit. I remember. And that's exactly what we did, right? 2 weeks in a row, bang, bang, came up right after that level. Now that level also shows up in other ways. It's there. That's clearly resistance. So that's why, that's one of the reasons about this 3960 is right in that area. So for anything to happen, we really need to break that, at least to go up and test higher levels. So this is, we're stuck below a really critical level here. But we also had good lows from a couple of other different ways. So it's one of those places to pause and wait for clarity. And so far, it looks like we can go a little higher, but keep an eye on the resistance levels that we talked about, because that's going to be critical.
Yeah, I mean, I'm in the same camp. I think, the weight of the evidence is that, we're going to get some counter trend rally continuing, but you just have to watch the lines and the different levels. If they give way on the downside, remember, it's still a bear market. So surprises are going to be to the downside. Don't delude yourself into thinking that a new bull has started, because we're not there.
Right. And up in this area, there's a lot of resistance also. But if we can clear this 38, 50, 70, we definitely have a 100-point run clearance, so to speak. So let's keep that in mind.
And those numbers on your chart, Barry, those are, I think when we were talking, you said those are sort of percent moves off the bottom, right?
These are like 12.5%.
Because it's interesting. The average bear market rally, if you look back over the last 3 or 4 bear markets, it's 15 to 20% is the average for a good bear market rally.
Okay. Well, that would bring us right up to around 42 almost. 41.85. Yeah.
So if we clear that, that 39.60, it could get frisky on the upside for a little bit.
Yeah. Could do that. No question.
So
that's what we are. We talked about that. We're done with the mini. Let's move on to bonds.
Bonds are interesting, aren't they?
And a little bit stronger than I figured. So last week we left it off at bonds tested the 200, the square line here, the 216 degrees down. And my call was that we're going to hang around here and retest the line, and we didn't really see a reason to go back and go lower. And I was wondering how we were going to test this zone, and we did pretty well, right? Thursday, Friday broke through, and now it's a matter of, can we sustain it, right? So this trend line is going to come into play next week, and we'll see. And the other part of the equation is if any kind of a counter trend can hold above 137.
Yeah.
And
we completed an ABC on that move up too. I noticed that when I was looking at bonds today.
It looks like it. So then if we can come back down and if we get through 137, we're probably just going to chop around here. Then, we're done. Upside, we could, let's see how we did the ABCD. Yeah, it's right there, right?
Right there. Yep.
So that could have been it. If we try to push it, we got this trend line. I think that's a critical trend line. We'll see how we do there.
And then otherwise, you got the full square, right? You got the full square. If it pulls back, that full square is going to be.
Yeah, if we can hold above that, then holding above and consolidating above the square would be, you know, we're more on a bullish sort of a posture. And if we slip under again, then, you know, clearly we have more to go.
Yeah.
Clearly, I think we have more to go. It's just not right this second.
Agreed.
So we're going to watch that carefully. But let's take a look at the weekly for some reference. I think it's good too. So here's our weekly bond chart. And we had this 141 marked off. We had it for a while. And that was, you know, the idea initially when I dropped that in a couple of months ago was that, you know, we're going to be soft and weak below that. We can see we slipped under, tested, came back down. And last week we basically tapped it again.
Yeah, the high tapped it.
So it's possible we try to tap it again, but that's pretty strong resistance. And that's what I'm guessing at this point. We're probably going to consolidate for maybe a week or two here, but we'll have to wait and see. If we take out 141, then on a weekly basis, we're open up until 150. That's a pretty good run. Otherwise, I'm looking for it to consolidate here and possibly, well, not possibly, and we can expect a next counter trend off of this. You know, we got 3 weeks up, so I think it's time for some kind of a counter trend. Yeah, that's it for bonds. Looking at crude, the story is pretty much the same. We're still correcting. Markets are soft. You know, the whole strong bull market leg is done. Then we had this sloppy sort of a market up into, it was a 45-day run. So that kind of kept that 45 days, meaning there's a 90-degree square. So half of that is 45. That was up here. If the market was strong, we were expecting it to hold about 107. But we're kind of wrapping around 107. It's not giving it one way or the other. You know? It's not being, well, it's a sloppy conditions. A lot of fundamental stuff out there and news. And so if you switch back to a square of 72, it looks, it's okay. I'm not, but this square looks pretty good. 60 and 90 is related, you know, 60 is 2/3 of a 90. So if we look at this, we get I think a much better view. Again, it's wrapped around in the half square here. So to me, overall, it's not very clear other than it's holding above, you know, it's holding up okay. Long as it's above 107, because, you know, we have, you know, it's like pedal, the foot's on the pedal, but it's not quite hit the gas yet, right? So, and if we get under this, then we're, you know, so the foot's kind of moving over to the brake side.
And you're getting these higher lows. You're getting those higher lows too.
We're getting higher lows, but we're also getting, you know, this sort of a very hard down leg and a lower high up here. We're it's starting to triangulate. So it's a matter of which way we're going to break that, you know?
Exactly. Yep.
The other way.
It's tight.
So yeah, it's tight. So let's look for the, you know, when I always say, when I get confused with the daily is not so clear. It's always good to jump onto the weekly and look for some clarity, right? So here's the weekly chart. And as you guys know, 90 has been the key level to watch for long term. And that's around 90 degrees up from the COVID lows, falls into around 97, 96, 97. And we're well above that. You know, throughout this channel, and we sort of week before we held above that. So we're kind of hanging in there. And this is what I mean. Long as we're above this 90, it has room to run and it can run. Sort of, how would you say that? Like it's warmed up, right? The engine's warmed up. It's not.
It's just waiting, right? It's waiting for a catalyst, it looks like.
Yeah. And long as we're above that, you know, so the key level to watch is 96, 97. So let it finish up this consolidation, super fourth wave-ish looking, and it might be done, but I didn't really see any big squares up here on a daily level, other than that 45 from here to there. So I don't think this is done, but we have to sort of wait this out, let it finish up the correction. All right, moving on to gold. another consolidation, right?
Hello, false break.
It could be. It could be.
Yeah.
Looks good, and especially at a square of 72 here.
Right. Right.
So let's see how that goes. I would still like to see some proof. And the 72 was okay, but this was really still in sort of a bullish mode. That 72 would have held, and this high low would have held, and we would have moved on to test at least the half square.
Right.
And we didn't. We went down, made a low, came back up, and then just sellers came in. So to me, we're not done yet. And if this false break, if it ends up being a false break, we should immediately see higher highs next week and a reversal of some sort. And I normally use the square 72 for gold because it seems like the right number. It works pretty well. But I was just, if you were to put the 90, you can see, and sometimes, gold will run do a 72 cycle and run a 90 in there to finish things up, just like we did here. We did 90 and another 8 perfectly, and that finished that up. So it wouldn't be out of the question to come back down 90.
Sure.
Right? And if we can do that in a reasonable way, that would be a really, really a good level to watch. Because entirely, in the bigger picture, let's move on to the weekly. Let's take a look. This is still very bullish long term. Here are the old highs. We're just right there. Not down here like wheat and cotton and some of these other commodities, right?
Right. Right.
So there's a big difference. It's not just you can't consider this like everything else. But zooming in on some of the lines that we drew in, you can see, we're sitting on top of the triangle that we broke out. Let me clean this up a little bit. So we're sort of resting along here. We have the 1767 was a key level on the way up for support. So we're just, for the whole year, we've been just above that 1767. That's been there for months. And the lower boundary of that would be 1670 if we get some kind of a flush. So for now, and that would give us a false break, off of these, and we'll see how that goes. But for now, I think for long term, and if you're sort of averaging it in, these levels are okay. All these pullbacks are okay. But for trading, there's not really much here till we hit a good spot and reverse. So we're just waiting for that and watching these, just like most of the other commodities. From a square perspective, we're at the half square sitting on top versus hanging below, right? So we've managed to do that and pretty well between the levels that we had, 1881 to the upside. Those were the highs in here for weeks. And then the lows have been right on the half square. So it's holding its place, just like you were talking about earlier.
I'll do a quick segment on gold too.
Yeah. So here now we're looking at the dollar. We left off last week talking about the potential for a new high.
Third drive, yep.
In a 3 drive. So if you take the first 2 highs and you put an equal box, ideally it would be around July 18th. And when is the next Fed? Is that around 17th, 18th, or is that 20 something?
I think it's in that time frame.
So if it is, give or take a little, these aren't perfect, but that zone would be just, that would be pretty good. So we'll watch that as we go. Every week we'll watch this chart to see how we're doing. But it looks like at least we have the 90, and it would make sense for at least to get a false break off of this last high. And so 106 is sort of a normal target. And if we're going to do a 3 drives, 106 to 107 would be ideal. 107 would be perfect, actually. So we'll see how that lines up. And looking at the dollar weekly, so here we're also looking for a check on the half square, and that would be around 106 and a half. So 106, 107 would be ideal, especially long term, and it will fulfill this sort of the measured move we've been having. So everything would line up and we would get 3 drives. Let's see how it works. If it works out, that'll be great.
Mm-hmm.
And so that's the next sort of resistance we're looking at, 106.5, figure 106 to 107, that range. Doesn't look like we're done yet.
Agreed. Dollar strong.
Yeah. Looking at the euro, looks like, again, unfinished business.
Mm-hmm.
So the full 216 square, if you want to go 3 squares down, it'll be around, 102. And we're not quite there. Didn't quite break through the half square. So we're trapped between. And if the dollar is going to go ahead and make new highs, I'm guessing we're probably going to go up and at least test the 216 degrees or 102 to the downside. And looking at the weekly euro, again, just taking this last leg, we are seeing 102 is right there, right? 1.5 squares. That would be sort of the logical place for it to go.
Mm-hmm.
And
if it gets to there, it's probably going to parity, right?
Well, it could, because look, we have a sort of a double bottom here, right?
Right.
Just about. So it would make sense. I would, clearly
flush everybody out.
Yeah, currency is not going to do this almost a double bottom, and especially couldn't even get off the damn, the low. It just fell right back into it. So it really, looks like it's going to 102 is definitely in the books, weekly basis. And that's all I have for today. We'll go back to Ben, and he'll cover some of the other commodities. Sure. Look at this. I just want to leave before that. If you take the high in 08, right? 288 degrees was that low. And we're right there. You see?
They got it. If it's almost over, they got to do a false break. I mean, look at that. It's just too tempting, right?
Yeah, it's too tempting, and it's pretty good. So we have.
But that's really nice square.
Yeah, and look how many weeks we've been there altogether, right? And over here, we're there for about 5-6 weeks, messing around here. Mm-hmm. And so they're not clean; they're always dirty. So this lines up with dirty, right? Mm-hmm. It's not a clean, quick low. So we'll see. But we're in the neighborhood. We might not have a whole lot more to run, but it's still definitely not time to perhaps jump in at this point.
Gotcha.
All right. Let me throw it back to you. We'll cover that. Well, there is the NQ.
Yeah. So last week, picking up on the story, last week we closed right here at this half square resistance. It was this bar right here. And we were saying, okay, let's see what we choose to do. Chances are we get stuck here and pull back. Let's see what the pullback looks like. Mm-hmm. Well, we pushed a little ahead on Monday and then gave it up, came down, tested here 2 days below the square, and closed Friday back above the full square. I mean, as long as we're above this full square, you could say, the counter trend is continuing and the pullback here was successful. If we get stuck under this at any time, odds favor we're going to take these lows out. Mm-hmm. I also threw in a time count. The rally off the low was 7 trading days. All in this decline, we've seen 5 to 7 day counter trend rallies, and then it gave it up again. This one is interesting from low to high with this little false break in between. We did 23 days. So I said, okay, where does 23 trading days put us? July 19th. Mm-hmm. Similar to one of the timings you had on one of the markets you were looking at.
$1.
Yeah. So this, late July, early August area, I think is going to be important. If we do bullishly, support here and move higher. Some other cycles that I've been working through.
It's it's 22 and a half, 22 days from the low, which is 1/4 of the square of 90. So that's in line.
Yeah. So this
23 there.
This late July, early August period is going to be important to watch. But for the NQs, we've got the levels here. And by the way, all the levels that on all the markets we follow, not only the markets we talk about, are updated on a spreadsheet, which, we'll post the link to when we post the video. So you can go check out those levels and mark them on your charts and use them as you see fit. But this, to me, it looks like we've, with that reversal on Friday, as long as we hold above this, call it 11.5 area, 11,500, we should be good for further upside into the week. And then the next test is going to be back up here again at this half square, which is about, call it 12,160 area.
Mm-hmm.
Anything else you have to add on NQs?
Well, I think that trend line is going to be sort of key here as for we're going to move higher, a lot higher or not.
Mm-hmm.
So I would watch that. I have a similar trend line on the the S&P has the same line, so you can watch that. But yeah, let's see how it goes. Looks like the low got tested fairly well. Of course, the S&P made a new high over Thursday's high.
Mm-hmm.
Here we have inside day, so
yeah, we just have to see if this full square level holds. If so, then we watch the tests when we get up to the half square. Flipping over to the commodities, one of the key things that I've been talking about almost all year, since January, February, is a lot of these commodities after the Russian invasion sort of kicked into consolidation mode. They had this spike with the Russian invasion, and then we started seeing sideways pullbacks, consolidations, and it was there wasn't a lot for me to say, hey, focus on this market, this one's ready to go, this one looks bullish, you can jump on this. It was more of like, let's see how the correction plays out. If it's going to be just time, these things will go sideways. If it's going to be price and time, we'll see deeper pullbacks. Well, this week, and probably starting 2 weeks ago, we started seeing these deeper pullbacks in a lot of markets in the commodity side. Bigger picture, which we cover on the monthly show, which we'll also record this weekend and post. The commodity, we'll go over the commodities and you'll see how they look from the bigger picture. It's just now that we're seeing these pullbacks and these deeper pullbacks, it's really time to pay attention because bigger picture, we don't think the story's over. There's 2 to 3 years left to run in this commodity bull. It's a matter of dialing it in as we pull back into longer term support and dialing it in on the shorter time frames when we can get some momentum behind us to begin to put these things on for trades. As Barrie was talking about in his gold segment, longer term positioning, you can, when we pull into these support levels, you're not trying to trade options or anything. If you're accumulating the commodity through an ETF or however you're doing it, averaging in once we get into this, monthly, weekly type support levels is really a good idea. The other thing I was telling Barrie is a lot of these commodities have sort of retraced that whole Russia invasion of Ukraine move. And, people are saying, oh, the inflation's done, the commodity move is over, because we're going into a recession, there's going to be no demand, so sell the commodities. The key thing I think here is that whole Russian move was not expected, right? It wasn't sort of planned by anybody that was buying commodities. We were buying commodities before that because of the supply demand imbalances and sort of this bigger inflationary trend and cycle that we were going to be experiencing. Mm-hmm. That hasn't changed. So this pullback, I think, once we settle in and see where the bottom is and the support is, if it holds good levels, it just gives us another really good entry on these commodities. And we will be highlighting that and talking about that as those opportunities come up on future shows. Let's see. The first one we want to jump in on is wheat. So wheat is one of those ones where in the last couple of weeks and the last month, we've really seen a lot of price weakness. Originally, it looked like it was going to do like crude oil here and just have this sort of sideways, big sort of triangle. And then the selling kicked in right around the time when people started announcing that Ukrainian grains were going to be released to the market and there was going to be a way to have them exported. So here's before the invasion occurred. Here's the invasion, right, with the limit ups. And look where we came back to now.
Mm-hmm.
We're back to those sort of pre-invasion levels. Also going to be testing some interesting trend lines here. I think we could possibly see 750 on wheat, if the recession, end of war, release of the Ukrainian stocks, all that sort of hits the market. You might see a little more weakness, and we could come down and test this trend line or potentially test this 750 area. The point being is that this is on the radar, watching it every day closely now, looking at like the 4-hour time frame to see if a bullish setup starts occurring there, because that's how momentum starts. You get the momentum on the smaller time frames, and then it filters into the bigger time frames. So wheat's not ready. I'm not saying, hey, jump into wheat here because everything's bullish and ready to go. You can see we closed on the lows on Friday, so that's not a short-term bullish sign, but we're getting into an important area of support. From here, you can see the highs in 2021. We're right in this area. And then, of course, we have this whole structure from before those highs kicked in, which equate to the full square around that 770, 750 area. So it's on the radar. Heads up, if you're interested in the grains, it's time to start watching them, looking for bullish momentum on the shorter time frames. Anything to add on the wheat, Barrie?
No, I think that was a very good coverage. And we're doing the monthly soon, so we'll be covering the monthlies, and we're looking at the bigger picture this week.
Yeah, you'll get that. You'll get that sort of 10,000-foot view. As has this pullback caused any damage or any concern on the longer time frame? So we'll definitely do that. Here's gold. Here's another one I wanted to talk about. I know Barrie covered it in the big five. I just wanted to add a couple different perspectives here. If you see gold, and see how it's done correction-wise, gold has been going sideways now for over a year, almost 2 years. If you look at the kind of wide range that we've had. Friday, we found support on the full square. We did a little false break. We closed at the high. All of those are very short-term bullish signs. It's yet to be seen whether this low in fact holds, or do they come down here and clean out these other lows and take the stops. And one of the things that history has shown us in trading commodities, both Barrie's experience and mine, and you can go back and look at the charts and see, especially the longer term charts, when a big move in commodities starts, a lot of times it starts with a false break move in the opposite direction. So it's something, given that these commodities have been correcting, we're looking at the charts, we're watching for that signature, because if it shows up and you get a reversal, it can be one of the earliest signs you can see that, okay, the next leg higher is starting. So I just wanted to point that out in gold. It has the potential. There's this little false break. I don't think that's the move, but that's the kind of signature that you're looking for. Anything else to add on gold?
No, we're good. I think,
yeah. Just another comment on crude. I know Barrie covered crude. Crude's another one of the commodities that, through all this weakness in the commodities, has simply gone sideways. That's another old market saw that you can use in your trading. Whatever performs best when in weakness is generally going to be the strongest when the sector or the group or whatever you're watching comes out of that move. So crude has shown really good resilience. We've essentially been in this wide triangle since it made those highs in March. We're getting higher lows on the downside, a high, one lower high here that we just came in. So let's see if it triangulates even tighter here. But I think crude looks bullish. The key level for me is in this 104 area. You can see where the low and then the reversal was on Friday was right on the full square. Again, that's another signature you want to see. If we can hold a full bars that hold above that, unlike this, are a good sign for more pressure to the upside. So we're watching crude longer term, which we'll cover in the monthlies, still very bullish. And this, to me, is a tell. They can't really get a lot of price weakness here off the off the high and the correction we've seen in the commodities. Even though everyone's calling for a big recession, you would think crude would really take it in the teeth, sort of like copper has, but it hasn't. So I think that's another bullish sign. Last one we're going to cover is coffee. A lot like crude oil, the correction here has been sideways. They have not been able to make a lot of progress on the downsides, while some of the softs have. Like if you look at cotton's been hit pretty hard to the downside. Sugar, not so much. It's going sideways as well. But coffee really is holding support in this full square, which is in the 212 area. The monthly, weekly supports in the 210 area. So this area is really, really important. As long as we hold above it. Here you can see they pushed down and then reversed right away. But this 212 area in coffee, as long as it holds, I think it when these commodities get rolling again, whether it's next week, next month, in that July, August timeframe, coffee should be one of the leaders due to the strength it's shown, while everything else in the space is correcting. Short term, you can watch this contracting triangle that we're getting tightly into this apex here. When the triangle breaks either the upside or the downside, we should see a pretty good move based on the energy that's being built up. Anything else to add in coffee, Barrie?
We're in good shape. Just let it finish up.
Yeah, and again,
and the triangle's getting tight, so we just have to be patient.
Yeah, because it's coming. It's coming soon. And again, if you want to, I try and do this, get different data points that point to the same thing. If you look to see where the triangle gets really tight, July 20th, 27th, early August. So this, lots of different messages, not only through my cycle work, are pointing to this time frame as, an important decision point area where things are going to really start moving, and the next phase in cycles is going to kick in. So the big thing for me, commodities are getting hit. The longer term, bigger picture, both cycle wise and the fundamentals, supply and demand fundamentals in these markets still favor bullish resolution and higher prices. So it's time to pay attention. It's time to, do your work, find your levels where, you're comfortable from a risk reward standpoint and getting exposure to these markets, because I do believe, in weeks/months, we're going to be embarking on the next move up in the commodities. Anything else you're focusing on where your key things you're looking at this week, Barrie?
Well, S&P is a big one, and also crude. Those are the two, and of course bonds. Those are the major ones I'm watching. We're definitely keeping an eye on all the commodities to see when, early clues of things winding up and being finished with this, but it looks like it's going to take a little longer. So
Agreed. Whether it's mostly time or some more price and time, I do think we have some time before it's time to put the pedal to the metal on the commodities. But it's coming. It's a lot closer than we've been.
And I think the monthly will give us some good clues. We're going to do that tomorrow, and we'll post it before Monday, and that'll give us some bigger perspective. So
right. So have a great 4th of July, everybody, and Barrie, good 4th of July to you, and we'll talk on the monthly show tomorrow.
Thanks, Ben. Good job.
All right. Take care.
Happy 4th of July, everybody.
See ya.
All right. Bye-bye.